talk about over trading. They talk about impulse trading. They talk about revenge trading. They talk about giving your profits back. They talk all these things and they say these are trader psychology issues. Well, they are trader psychology issues and I work with them every day. However, before they were trader psychology issues, there was something much more primitive, much more dangerous. What these are gambling instincts. Most traders actually are gambling. They are not trading. They are not working with probability and accepting probability as the rule. They're trying to produce control one way or the other. And when they hit that section of like over trading, what they're doing is they're walking in with a very deep primitive belief about I can win. I can make things happen. I can get the pot of gold at the end of the rainbow. And they get so fixated on it, they don't see that trading is really about randomness, about managing randomness. And ultimately, though, they come in with a bias that allows them to jump into trades and to do really dumb, stupid things. That's the same thing that happens to the gambler at the casino. They come in thinking they're going to win. They don't see that it's a random event. The casino does that. The casino knows that if you play cards long enough at that table, they're going to take your money. Same thing happens in trading, doesn't it? That's why only 2% of traders are actually consistently profitable. But it starts just there. If there's an instinctual mechanism that has us wanting to find that pot of gold, it drove our evolution. It drove us to become the successful species. It wired in. We don't see that bias controlling the way we think, perceive, and act. We fall into gambling mind, not trading mind. Then let's take another one. Let's take impulse. How many times have you sat there and said, I don't know why I did it, I just did it. What happens, you saw opportunity, your caveman brain saw opportunity. It jumped on it before it could get away. There was a fear of missing out. They jumped in. And at the same time, there wasn't really a good evidence that it was something around randomness. Yet there they are, they've jumped in and disaster ensues. The same thing happens with revenge trading. Revenge trading is caveman's ability to say, you know something? I need to get it back because I'm going to die. It's the death instinct, and you're trying to overcome it, and you're scared that if you lose, you die. And so what happens, you don't want to lose. You keep throwing good money after bad, good money after bad. And that actually, the casino knows that too. They know that once you go on that winning streak, and then it falls back, is that you get hooked by the gambling instinct, that mechanism that says, I'm not going to allow you to fail. You're going to, by sheer will, make it. I want you to listen to this. I want you to look at your trading. And I want you to go beyond trader psychology down to the primitiveness. That's behind the bias of winning. You know, it's a random event, and really good traders, they're neither trying to win nor lose. They are performing. They're performing a standard practice consistently over and over again that allows them to find a small edge within the way they trade that allows them to extract more capital than they give back. They full well know that winning is just landing on the right side of probability. Losing is just landing on the wrong side of probability. There's nothing more to it. That's how they get to the edge. Yet, we find ourselves in gambling mode where we want to win, where we see the pot of gold at the end of the rainbow and we become obsessed by it. And it gets us out because we start thinking that we can win and that that is not random, when in fact it is. Your ability to manage the randomness is what takes you out of the gambling mind and moves you into the trading probability mind. Yet what I want you to notice is how few people Few people evolve to the moment where they actually are able to move from that caveman stuff that got bred into us during thousands of years of survival and move from there into probability management. Very big difference. I want you to look at that. Next time you overtrade, start really asking what's going on here. You know, that lust, that need to like provide, that need to jump on opportunity when it's there, not thinking that it's random, thinking that you can make things happen. By doing something, you're doing something. The last one I want you to look at is how gambling is an escape from boredom. It gives you a sense of excitement. And trading, friends, gives you plenty of excitement, risking all that capital and stuff like that. You don't know what's going to happen, even though you want to. And you see, my gosh, that's exactly what's happening at the casino. They're going in, they get this excitement. You know, someone may be comping you. You feel like a big man or a woman. And yet what you look at is this is basically a mechanism built for hundreds of thousands of years for our instinctual survival in the short term, like primates. What we're looking for is something completely different. We're looking for the probability mind where you're not over trading because you see it's a random event and you have to manage the randomness. And winning and losing becomes just winning and losing. And yet, here we are at the gambling instinct. I want you to look at it. Take a look at when you are sitting there over trading, revenge trading, really getting into the excitement. And start noticing that's exactly the ramp up. That's exactly the mentality that the casino needs from you to be able to take your money from it. The same thing happens in trading. So I want you to see the link between gambling, trading mind, and financial performance. The only thing you can trust is your trading account. You start looking at it, you start going, okay, that's that trader psychology term, over trading. No, go beneath that. That's that gambling problem instinct that has you wanting to seize opportunity and not seeing that this is a random event to be managed rather than something that you can control and make happen. If you do this, if you start really framing, again, that sense of excitement, that sense of wanting to win and knowing you can win, that revenge trading, all that. What I want you to do is to look at it from a different lens and see the physical, biological impulse to gamble. Gambling has been with us from the beginning. You know, you think about when they were choosing a new disciple in Jesus' group, what did? They drew straws. Okay? What happened at the crucifix? Roman soldiers gambled to get his clothes. It's been there all the time. And what I'm asking you to do is take a look at your trading. Start seeing it and start claiming it, not as just a trader psychology issue. That evades the. I'm asking you to look at something much more primitive. Something that you're going to have to really begin to say, you know something, I'm going to have to reprogram the way my brain interprets uncertainty, particularly my will to win, a different mind that produces consistent profitability in trading. It accepts the randomness. It lets go of winning and losing and focuses on performance. It doesn't get hooked gambling instincts. Look at that and start noticing it and start recognizing, oh my God, I've been trying to say this. No, this is gambling. That's the piece I want you to see, because you have to be able to see it before you can start fixing that problem. It's a big deal, friends. I wish you well. And if I can help you, come see us, come to our website, really check in this stuff. Read the article that goes along with this video and really start thinking and start looking at the gambling instinct versus the probability mindset. Thank you.
What's up, everybody? What is up? What's up? What's up? Just to kind of touch on some of the stuff he was saying, like I think that's where both, where a lot of people are right now, and it kind of shows with the fact that we all kind of typically trade, and we have days when we win, days when we like lose. We risk bigger day on other days than we would normally do, but you know that's kind of where we want to get out of the habit of, like, a lot of you guys know what you're looking at. You can mark up your chart. You know how to look at an entry. You know how to choose the right pairs, but you don't understand risk management. You don't understand how to trade in probabilities versus just what you seeing on the chart, right? So I always like to watch this guy. I want you guys to get in the habit. He got a lot of mindset videos. His name is Randy Howell. If you haven't been on, watch him. I promise you, you're gonna get a lot out of him. And you guys should definitely take advantage. It's free. It's on YouTube. So that's another thing that I would also recommend. And if you're first time on here, I see LeKeisha is. Glad you made it on here. And this is usually kind of like an open session. We just it is what it says. It's how to, and that falls under everything. How to do whatever it is that you guys need help with. Um, and I just kind of usually just hop on and answer all the questions that you guys have, based off of whatever the questions that you have. So, if it's something you were needing to ask or wanted to find out, um, you know, this is usually the session for that. Anybody else first time being on? Anybody?
Yeah, it's my first time on that Cantrell.
Cantrell, what's going on, man? I recommend you guys to, feel free when you got questions. I prefer you guys to drop them in the chat. That way I can like keep them over here so everybody can see them, and then we can go through. Um, but if you have something that come up between, and feel free. Also, uh, you can use your mics, man. Just hop in anytime. No worry. Like, no question is crazy. No question is too big. No question too small. So let's get to it. Christine asked about a analysis on Bitcoin. Um, I was trading Bitcoin over the weekend. Um, I did get into one or two trades. Um, and I mean, it's pretty obvious. It's in a bullish momentum. I took a trade around this area and I got stopped out, but in profit. This was the actual area that it came after, and then we had this move. So, I missed that, but I had the right intentions. So at this point, for me, um, I need to see a little consolidation before I do anything. And it looks like we got a little right now on the 15, but I want to see it on some of the higher time frames before I make a decision. Um, if I'm gonna buy Bitcoin, I want to see it come back down and give me a retest, in somewhere around 50%. We have a lot of have a lot of a huge range for it to come back down to. So I would want to see it back at this high to retest this high before we looked into this. And I would probably look to enter around enter somewhere within this range right here. So anywhere in between here before I actually made a big move. Maybe I'll get in a couple plays in between this, but overall I'm looking for this to come back down in this area to retest and then make his next move up. You overall, it is heavily so overextended right now, but it's just keeps going up. You just had Elon Musk just buy like $1 billion or $1 trillion, and he also offered he's also allowing Tesla to now accept Bitcoin for its cars. So you gotta definitely consider that. So we can even get a retest of this high. So this high might be one to consider too. Right here. This high right here. Another area. You can see a retest that. Let's take a look at this last move up on the 4-hour. Yeah. So yeah, I would look for a retracement or consolidation at some point in or at around these areas before I really, really look to continue to buy this. If you want to take a break and retest setup, you could probably take this 4-hour area right here and box this in, box these highs, and this low end right here, and trade the breakout of that area is also another option. But I'm going to be looking more so for a retracement before I take another trade on this or consolidation. And that's exactly what I'm going to be looking for. So if as far as the numbers go, I'll be looking for it to sweep this old high at 41.90, 41.960, 986, 4100, and if any, at worst case, 38.50 one more time. If you want to break and retest, you have a high at 44.847 and 42.575.
Hey, Corey.
Got it?
Yes, but mine's a little off, and that's really affecting my trading, my Fibonacci. I'm on the same chart as you, my Coinbase, but I'm having an issue understanding where to take my Fibonacci from. I know where to take it to. You take it to the next high, but how did you choose that point to take it to from the most recent low? Is it always just a rule of thumb to take it from the most recent low?
And then this higher high, higher low is a cheat because it just tells you, right? This leg right here will be one move from here to here, right?
Mm-hmm.
This gave you a kill zone retracement. I don't have this is a 38 right here.
Mm-hmm. Mm-hmm.
So you can use this move to this move as the next move.
Oh, okay. That really helps.
That will
Oh,
give
and it
you,
lines up with my 4,200. Okay.
yep.
Last question.
The other
So,
thing about this though
mhm.
is on a move like this, from here to here, if it doesn't come all the way back down to your 618, there's still a possibility that this may come down. So now you would want to look at this move right here on the higher time frame. So let's look at daily,
Mhm.
right? And if we look at the daily, you'll see that the daily hasn't made its retracement yet.
Ooh, okay.
So we had a short-term retracement, but we didn't have the higher time frame retracement yet. So that's always something that you have to consider.
So can you just move your mouse down to where your 100% is? I'm just trying to see if mine, because I have my higher highs and higher lows on 28. See, that part that says higher low, mine is at, oh, never mind. It's at the same thing. Okay. I couldn't figure out why I was tripping, but we analyzed on the monthly, and that's how we saw how investors thought it was going to 100,000. May you please put it on the monthly one more time and drop your chart
Yeah,
just so I can study it.
I sure can. So from the monthly, let me use a different chart.
Okay. Even though I feel Coinbase is the most accurate.
Yeah, Coinbase is one you want to use. I have a chart for this long term. Okay, so
How did you do this? Never mind. What? Let's just go one at a time. Go ahead.
uh,
I'm like, how did you do this? So did you basically just print a fresh Coinbase chart?
I'm using a different layout. So if this little tool right here
Mm-hmm.
is it saves your work, but it also has a managed chart layout.
Mm-hmm.
And when you're managing your chart, you can create and load a new chart layout right here. You can load the ones
Gotcha.
you have here, and you can create the new one here. If you have a free account, you can't do it. You only get one. If you have a paid
Okay.
version, I think the Pro you can have 5. The Pro Plus you can have 10, and the
Mm-hmm.
Premium is unlimited.
Yeah, I have it. I just never knew how to use it. So basically, it's like Microsoft Word, where you can use two of the same documents and name them different things. So basically, if I go back to my Coinbase, because I was thinking about making a new account because I needed a fresh
No,
Bitcoin chart, but I can go to my Coinbase, kind of clear all the stuff off. I know how to Control Z,
you don't
load
even have
that
to do
as.
that.
Oh,
So
okay.
when you create a new chart layout,
Mm-hmm.
you are essentially creating a excuse me, a new copy of a Bitcoin. Even though I'm in Coinbase and I have Bitcoin open, I'm in this layout. The Bitcoin, and in this case, this is my Bitcoin long-term bias chart right here. This
Oh, it did it. It did it for me.
this one is my Bitcoin. Um, this was just my Bitcoin chart. I didn't get creative with this name,
Mm-hmm.
but this one is my Bitcoin chart. This is the symbol of Bitcoin on Coinbase, right? But everything I do in this layout will only live in this layout.
Gotcha.
If I make a change over here, like let's say at this high that we just create, I'm gonna just
Mm-hmm.
put this box right here, right? and then I save it. And then I come over here, that same box is in there. This is
Gotcha.
another box. That's a bad example, right? Let's just draw this little X right here. Let's say we drew an X right here. And we saved it on this chart. Because I'm in this layout, the Bitcoin long-term layout, right?
Mm-hmm.
And I'll show you Bitcoin long-term layout.
Mm-hmm.
In this chart, I don't have the big X because I am in the Bitcoin layout.
Gotcha.
And so I know a lot of you guys keep a watch list. So if you keep a watch list, right? Right here, like this, my watch list. These are the things that I'm always going to be looking at. So if I want to open up Bitcoin over here, all I gotta do is just come over here and open it up here. But that's all it is. That's
Wow.
all it is.
And
So
then can I use what you do with the two charts to compare my Bitcoin long term and then my Bitcoin like current with all the markups on it, or no?
when I have two layouts,
Mm-hmm.
you can, but right. So the if you wanted to use like this, let's say this the monthly, and
Mm-hmm.
then let's say this is the 4 hour, right?
Mm-hmm.
Monthly 4 hour, right? If you want to do it and just have this be your long term, right?
Mm-hmm.
And then this be your short term 4 hour. You need to make sure that you don't have this linked. Check.
Oh, let me write it down. Okay.
Yes, this is being recorded. And for you guys that are on the session, you'll get the recording. But it's only for you guys that attend the sessions. It's not for everybody in the mentorship. If you don't get on, you don't get the session. So, um, so if you only want to, if you want to make changes on the higher time frame only,
Mm-hmm.
and then do things on the lower time frame only, you need to unlink this right here. Because if you don't, all right, here's our box again, right? This is only happening on this chart, right?
Right.
And I want this to only happen on that chart, then because it's the higher time frame, then that's okay. You know, if I only want this, um, you know, let's say I only want to have this box on this higher time frame, but I don't want to have it on the lower time frame, right?
Mm-hmm.
But if there's something that I want on a lower time frame that I don't want on the higher time frame, let's say I want this over here, because I don't have this link, it's not going to show on both. But as soon as I link this, now everything I do on the higher time frame is going to show up on the lower time frame. So I just drew this
Gotcha.
line and you can see it right here as well. Or if I just put this icon right here, let me see where you at. Now you can see it on both.
Right. And then one last question, because I got to go to work and I want to let other people ask questions. With the 4 hour, I believe this one is to the right. Yep. But that one, when I'm comparing them, I know I have to have this selected, and can I name this something else? Like, let's say I name this Elon Musk Bitcoin, because that's truly what it is. Just because I want to save that moment of time or save that markup. Can I name it something different? Is all I'm saying, and upload it. The
The
4 hour one.
layout,
Mm-hmm.
yeah, I mean, like if I'm understanding correctly, yeah, you can have like this one is named long term, and then this one
Mm-hmm.
is just Bitcoin.
Gotcha. Okay, cool. And then, yeah, you sorry to interrupt, but thank you so much. That gave me a lot of insight. But can you please finish doing the monthly?
This is the monthly right here.
Mm-hmm.
And monthly, and for you guys that are new, sorry, this probably might be a little over your head, but I will definitely get to all your questions beforehand, right? So after this, right? So to get a, an idea of where the market is going, right?
Mm-hmm.
We know this move started down here. And we know that because this was the last down candle to put before this move happened, right here, this 19,000, this one right here. We measure that from here to here. And then let me go to my other fields. Okay. All right. So once Bitcoin made this 19 or 20,000 move right here, draw your fibs on that, right? And now your predictions are this has got to make a symmetrical move, right? Where you have the impulse from the low to the high. After it retraces, your expectations are for this to make its measured move to here, to the 200. That's where 40,000 prediction came from. So when all the people were talking about it's going to 40,000, this is where they were getting that information from, right? But of course, this is a market, right? So it's not just gonna do it like just because it went to 20, right? It retraced, right? And when it retraced, it went into an area of consolidation, right? Where it touched as low as 3,000 over here and went, and held that area, right? So once we had this move created, right, from this low to this high, this gave us or should have given us our range for our consolidation, where once we made this low, once we made this high, as long as it doesn't break below this high or this low, you would be inside of the range of this consolidation, like it stayed for up until this candle broke out of this high, and then this candle broke out of this high, right? So now we know that from this low to this high, we had this move, which brought us back to our 20,000 area right here. This move from here to here on this candle was basically this same move right here. But once we made this new higher low and broke out of that, now we measure our most recent high at the time, right? Which gave us this candle rejection right here. Now, this high is still live because it's still pushing up. So we measure out again, right? But before, when everybody was getting their 100K prediction, it was coming off of this low and this previous high. If we look back at replay, we can go to here and see, once we replay, that before that we had this high that came right about over, it's going to be a little quicker than that. So once that, whenever this goes and does this high, you'll see like where it came from. is coming. So this was the breakout. And once we got our breakout, the first time we got any short-term retracement or pullback, it was on this candle, right? And that's where you want to measure from, right? We don't get it until we get here at this point, right here. Okay, so once we see, you know, this is on a monthly, but on the lower time frame, this is our first time we got like a pullback on the lower time frame. So that's what we're gonna measure from. So now we have this move right now from this high to this low, right? And if we're looking at this and we get a retracement, our expectations are for this move to give us this area. That's where we got our 60K prediction prior to this, right? They said it was going to be 60, 70, right? And they moved up along this area all the way up to 70. But that 100K prediction came from this impulse right here, where this put us symmetrically from this high to the 200 area. They give or take another couple pips because they know that there's going to be wicks that probably push this outside of this up to 100. That's what that gives us that. So this puts us, if we get this is why and where this would push us around this area, right? But if we made this move outside of this 200, then it's no reason for it not to go to 100 because there's no huge barriers that are going to stop that as far as price action goes, right? Got it?
Corey, this is amazing every time you do it. I'll be back next Monday. See y'all later.
Okay. All right.
Bye.
Bye, Christine.
Bye, guys.
Okay. That was for new people, that was probably not the best question to start out with, but you know, it's all good. So Keisha asked, what percentage of your account should you use when you start trading? She also asked, my son is 17, he'll be 18 in June, and I want us to learn together. Is there any companies that you can set up, that I can set up for this custodial account? And then she asked, when we're watching the market for trades, how far back should we go to follow the patterns? Okay, so the first question was, when you're starting, what's the percentage of accounts you should use? So when you're first starting, or you know, whenever you're trading, right, you kind of actually want to stick to a 5% limit, right, where you're using a max of 5% onto of your account. So if you're using, you know, if you want to risk or use, you know, at least 3 to 5%, right? So let's say that you are starting your account with $500, right? Let's make this a little bigger, right? Let's say $500 account. And you say you want to, you know, use, you know, at most, let's say we'll do in between 5% at risk to 3%, 3 to 5%. I said it backwards. Right? So any trade that you get in, your max loss should be in between $15 to $25 on this account. If you're going to stick between those risk margins, right? Because if you take a loss of anything higher than that, like let's say you take a 10% loss, right? A 10% loss on your account on this trade would be $50, right? And if you break this down, let me get some clean space. You break this down, right? How many times can you lose trades? And I actually want you guys to answer this.
One?
No.
Oh.
Before you blow your account,
Yeah.
how many times can you lose on this $500 account?
10.
10 times, right? That was good. I don't know who said it. Okay. Now, this is if I am risking anything above if I risk 10% of my account every day and I go on a losing streak, right? In 10 days, my whole account can be gone, right? Now, if I am only risking 5% on my account, it's $25. What did I just do? When I use 5% of my account versus 10% of my account, how many more trades, how many more chances did I give myself to lose in this account?
10 more.
Mm-mm.
5%.
Mhm. How many, I gave myself a total, that's why I was looking for the total, that's why I said it. But I just gave myself the opportunity to lose 20 more times. I can lose, right? And this is actually how you want to think versus how many times I can win, right? Because if you're new to trading and you don't know what you're doing, right? You need to focus on how many times you can lose versus how many times you can win. Because your goal is to keep, your goal as a trader is always to preserve your account, right? So you have to manage your risk properly to keep trading, right? Because you can, if you keep trading and you learn how to trade properly, you will make money, right? But during that time, if you're risking the right way, even when you're losing, and if you're risking proper risk management combined with proper, a lot and risk, you will eventually get to that point where you're consistently winning. Even if you're only winning 50% of the time, if you're using 2 to 1, at least risk reward ratio, you will be a profitable trader, right? And that's the goal that you want to get to, right? And let's break it down one last time, right? If I'm risking, now let's say I always stick to 3% risk, that's 15 times. I won't make y'all do the math, but that gives me 33.3 times to lose in this account, right? Right? So if we are, let's say, again, all right, we are winning at least 50%, right? We need a little more space. And out of those 33 trades, we lose 16. We win 16. Let's just make it an even number, right? But we're trading 2-to-1, right? And now, right, we're gonna take this number, we're gonna multiply what we would win, $15 times 1, which is 15. This is our risk reward. We're always our reward versus risk, right? Reward versus risk, right? That's what this 2-to-1 is, right? So for every time that I lose a trade, every time that I win a trade, I win $30. Every time I lose a trade, I lose $15. So let's multiply this, right? We're gonna multiply our losses by 15 and our wins by 30, right? 15 times 16 is $240. Now, we're going to take the same thing, the same number of wins, and multiply that by $30. That gives you $480, right? Now subtract the 240 from the 480. I am up on my account $240. Total on this account, right? That's how much profit I would have earned on this account. And my total on this account, it would be the 240 plus the 500. So I will be looking at $740 in profit. When you break this down, doesn't it make sense for you to look at how much you lose, how many number of trades that I have to lose when we're looking at over here versus how many trades I have to win, right? Right now, in a situation like this, you still a profitable trader right here. Even though you lost 16 times and you won 16 times, you were using proper risk management, right? And you use proper risk management. And even though you lost a lot of times, let's say that, you lost a lot of times, but you still end up being profitable, right? Now, let's look at using a 1-to-1 where you're risking just as much as you're losing, right? And we have those 10 times we can lose on the 10 times we can lose on using 10%, right? Let's use 5%. Let's use 5%. We're using 5% and we have 20 trades that we can lose. We won 10 and we lost 10. And we're using a risk reward of 1-to-1, right? And for every trade we win $25, right? Every trade we lose $25. And now we are going to look at it like this, right? We're risking 5% of our account, right? And we multiply this by the 1, just like we did over here, right? We're gonna multiply the 10 by 25. That should give us 250. For my wins and 250 for my losses. Right? So I've won $250, but I also lost $250, right? At the same time. So what am I when I look at this, right? So altogether, my profits on this account are, guess what? 0. And your account balance is the same thing. So what you just did as this guy, you just, I won't say wasted, but your efforts weren't used properly, right? And basically what you just did was you know, you just took your, you just used a lot of time to, only break even. If we do the same thing with this 10% account, 10% risk, then you have actually, I won't do the math on this, but you've actually blown half of your account on this. That's what you would have done with this scenario. You would have blown half of your account. At 1-to-1 with a 10% risk, you would have blown half of your account. If we had to divide this in 5, you would have been using 50 and 50. So you would have been down 200. Your account would be at the end of whatever this 10 trading cycle, your account would be at $250. So here your account is up $700. Your account is at break even over here, and then your account over here is at 50% at 250, right? So this is why you want to stick to at least 3 to 5%. This kind of go for everybody to kind of explain this and break this down to you guys, so that way you can see this like, from a visual perspective. Antonio, yes, guests can get on. What brokers are allowed to trade Bitcoin over the weekend? That is going to be Hugo's way, or I think Osprey does that. Q, Nisha asks, can you send it to me from work? Sure. Cortney and drawing the fields. You draw the fields from high or low. Yep. Let me answer that. Oops. Let me see. Let me go through this chat right quick. I hope you guys got a good understanding of this. Hey, Anna. What's up, Noel? Tequila Green. Cool. 10, 10, 10, 10. Okay, that's the answer on that. Compounding doesn't seem like it adds up, but over time, it's infinity. Yep, that's right. Corey, can you go over risk reward on any chart on SPX? Sure, we'll do that. That's a good question, Noel. I wasn't even thinking about it like this. That's right. Most of the time, nobody thinks of it like this, but this is how you actually need to think about it, right? Because you have to think of like I said, your goal is to preserve your account, right? Because while you're learning, you're gonna lose, right? While you're learning, you're gonna lose. Yeah, you can get a screenshot of this. I'll save this. While you're learning, even if you take, the best trades in the world, they're gonna lose sometimes. Risk. You're gonna lose sometimes, right? And in losing, you have to understand, like, it's okay to lose, but you need to lose properly, right? And in losing properly, you have to manage your risk at the same time. So properly losing means that I'm managing the amount of money that I lose on my account. right? Not, and at the same time, I'm also managing the trades that I win in as well. I'm making sure that they hit my targets, right? Because if you're winning, 2-1, and you're always using 2-1, that means you're staying in the trade the amount of time and you're hitting the targets that you expected, right? And you're taking partials and you're doing all the good stuff in the right way, right? But it's those times when you are getting out of the trades early. You are not hitting the targets because you didn't take, you got scared when you saw the retracement or pullback. A lot of times when you get out or you see that kind of stuff, it's because you have probably over leveraged your account. If you're not, if you're losing and using a 3% to 5% risk management, right? You won't get out of the trade the same way, right? Because on a $500 account, if you see $50 and you're in $50 of negative of drawdown, I don't care who you are. In most cases, you're probably going to get out of that trade because you don't want it to go any lower, right? Like, let's not even say $50, right? Let's say that your $500 account, you get in a trade and you go down negative and drawdown and you get to 48, right? 48, $45. You're going to see that. And in your head, you're going to be like, man, I need to get out of this trade because if I don't, I'm going to go and be, $100 down now, and once you do that, now you are 20% of your account is gone, right? But, right, if you're using proper risk management and let's say that you're using 3%, your goal is going to be to at least make $30 on this trade, right? If I'm on one of these trades, is to make $30, right? So if I go down on the trade and I'm, $14 in drawdown, and then it reverses, I'm going to be okay with that, right? I'll be more comfortable staying in the trade because I'm only down $15 on a $500 account. And if and when it does goes into profit and it hits both of my targets, I'm up $30 and I don't have the same anxiety that I would if I was down $50 versus being down $15, right? You'll stay in your trades longer. You will manage your trades a lot better because you're using proper risk management. And then you can get into trades without feeling like I gotta just get TP1 or TP, 2. You might be able to get TP 59 if you wanted to, right? Or you might be able to turn that short-term buy or sell into a long-term trade that you can stay in for days or weeks, right? Because you've managed it properly. So
hey Corey, so I'm doing this before I get into any trade, right?
Yeah. And like a lot of times, if you trade the same thing over and over, you kind of know what's the right lot size, what's the right percentage, because if you always trade EU, right? You
Yes.
say that, and I'm just using this as an example, you always shoot for 30 pips, right?
Right.
So that means that I know that if I got a $500 account, that my trade doesn't need to go more than 15 pips in drawdown, right? Right. So that
Yes.
means that at the end of my trade, I should have $30 in profit because I've gone 30 pips into profit, right? And now, because I know that I only need to use 3%, I know that by using a 0.003 or whatever the case is on that account, I'm just making up numbers right now. But if 0.003 gives me $15 in drawdown, if I go $15, let's just say 0.1, right? if 0.1 gives me a $15 risk on this trade, then I know that I shouldn't use any more than that, right? Or any much more than that. That's kind of how you want to look at it. That's kind of how you want to look at it. So, and then that was a good question, LeKeisha. Your last question was about your son, and can you open up an account? There are accounts that you can open up for your son, being that he's 17-year-old. You will open it up, and I cannot at the moment recommend a broker, but I think the easiest thing for you to do is to the broker that you have now, just open up a separate account for him to use inside, because like even though you have, like, let's say you have Hugo's Way, you can actually open up another account that inside of Hugo's Way. So you have one MetaTrader login for your account and then another MetaTrader login for his account. And then you can just put the money in there and manage everything through your single account. That's probably the easiest way to do it without having to go through doing anything like, getting his own individual account. And it also a way that you can go in there and look and see his progress, right? You can go in there and see his balance and, see what he got going on, and as you guys learn together. Yeah.
Quick question, Corey.
Yep.
So why on the Go Live they recommend, I think it's Delano 0.01 for every 100, because the way that they call the trades, the stop loss is pretty much 100 pips. That's going to be 10% or more.
This is true. Now that that kind of goes into that's always, for me, has always been a stickler, my personal opinion, because if you are trading with that type of lot size, I think that their recommendation for that was because of, it was a lot of people when they first started trading, the indices, they were trying to trade accounts with like $150 account. And you can trade the indices with that size account, but a lot of brokers, the minimum is $1 per pip, right? So if you're trading it with a $150 account, you go in drawdown on one trade, you blown your account already. So this was kind of to appease those people that still wanted to trade the indices, but use a smaller account, right? Because, it's a product that, it's everybody was wanted to trade the indices, and, it's just one of those things that is something that's very volatile. And to keep people with those really, really, really small accounts from trying to trade, it was the recommendation to at least do 1,000 per every $1. Got me?
Yeah, I got you on here with you, but I was just thinking about the math on that. That's easily a 0.01. That's easily 10% if that loss is to get hit or close that.
Exactly. If you break down that $1,000, if you break that $1,000 account the same way, and we do 100 pips, that's 10% loss, right? That means that we only got 10 trades to lose, right? So if you break it down, if you break that same thing down, you only got 10 trades to lose before you've blown half of your account. I'm sorry, you only have 10 trades to lose before you blow your entire account. If you're trading at 1-to-1, that means that within those 10 trades, you lose half, you win half. Now you've blown half of your account if you take 5 trades, right? if you start to reduce that, right, and you're using 3 to 5%, and that was why I always recommended FX Choice to trade the indices, because you could use a 0.01, but it would be 10 cents per every pip. And that means that I can break down the 0.01 to get to a 3% or to get to a 5%, where I would use half of the 0.0, I would use half of my lot size to get 5%, and then use a quarter of that to get to the 3%, right? So that way I'm still managing my risk on my US 30 trades or SPX trades, right? But right now you can't open up, you can't open up a FX Choice account, but you can open up an Osprey account. And if you have an Osprey account and you want to trade indices, you need to trade SPX only if you want to use proper risk management.
Well, why can't you open up an FX Choice account?
They took the they restricted it. It was the broker just stopped accepting new clients.
Wow.
I don't know why. I think it has something to do with people who were opening accounts with them but not paying taxes. They were just trading, getting profit, and never paying taxes. So the US restricted people from opening up accounts with them, at least for now. I don't know if it's permanent.
So for the indices in the US 30, what brokerage should you go with?
You should go with Osprey right now. Right now, Osprey, because Osprey allows you to trade SPX the same way you would on FX Choice.
Oh,
if
okay.
you
Well,
trade any of the other indices, you'll be trading it as if you were trading with Hugo's way, and that'll be $1 per pip.
Okay, so is basically, as far as the price per pip, is Osprey better than Hugo's way?
I'll show you. Let me show you this little article that I did. And if you guys ever want to look at this, it's inside of the Telegram, Discord, under trading resources, right? And if you scroll up and you look for this broker comparison right here. So everything I'm telling you, if you forget this, you can come back here, right? And yes, if you already have, like Belinda and myself, I already have an FX Choice account. They're not going to close them, so you don't have to worry about that. So this little blog I did a long time ago, let me see. I hope y'all can see it, but so some things to consider. Let me just copy this. Let me copy this. And then we'll just paste this here. Okay. So the easiest way to understand this, right, is I'm gonna tell y'all a secret too. It's funny, but it's not. I be cringing when I hear somebody say that Hugo's way pay out more and all this kind of stuff, because that's not actually right. Like, even when Kim say it, I'd be like, no, stop telling people that. Like, I'd be like low-key a little annoyed. Like, I'd be low-key annoyed because that's not actually true, right? It's not that they pay out more. Like, it's the same thing, right? It's just the lot sizes are different. Like, if I want to get $1 per pip on FX Choice on any pair, I can still get the same $1 per pip. I just got to use a different calculation for the lot sizes. right? Or when somebody say cot pay out more or whatever the case, they don't pay out more. Get that out of y'all head. Like, stop saying that for I digitally
The leverage,
punch
the
out.
leverage,
Huh?
the leverage is different. So FX Choice will
That's
not
it.
allow you to make
That's
as
all
much
it is.
because they will not allow you to blow your account as fast.
That's all it is. Don't. When you hear somebody say pay out more, I want you to get as mad and annoyed as I do. Okay. Like, get that annoyed, because that's not right. That's not right at all. Let me pull this over here. Right. So if we look at this, right, first of all, understand when we look at points, right, given whatever it is, right, we looking at points as, and I'm gonna delete this part. Let me delete this part. So let's just say 100 pips, right? We're just gonna use that round number. If I am on FX Choice or Osprey, and we're gonna only consider, let's just consider SPX right now, right? If I'm trading it on one of these brokers, 0.01, $1 per pip for these brokers. FX Choice, 0.01, 10 cents. This also accounts for Osprey, right? So if I gain 100 pips in FX Choice and I use a 0.01, I get $10. And if I gain, if I want to gain $100 off of 100 pips, all I need to do is take the 0.01, adjust it to a 0.1. That's all I have to do. It's the same trade. You would be risking the same thing on FX Choice, and that goes for Osprey on FX on SPX. If I'm looking at COT Forex and Hugo's way, and I want to risk $100 per 100 pips, that's a 0.01. But I cannot adjust my risk properly on this same trade, right? I can't do 3 to 5%. I can only do, at this case would be 10% of my account, meaning I only got 10 times to lose, right? Versus me coming to FX Choice when I can break this 0.01, I can break this 0.1 down to a 0. Let's go back in here. If
And
I
you can't
wanted,
take partials on the other ones either, on the 0.01.
cannot take partials, right? I can break this 0.1 down in half. And now instead of risking $100, I'm risking $50. And I just gave myself 20 more trades that I can lose. If I want to do 0.03 to get 3%, now I'm losing $30. Now I just gave myself 33 chances to lose, right? That's the difference. Plus, like Chin said, I can take partials. Over here, I can't do it on COT. When I got a 0.01, that's the lowest that I can trade with on these charts. So if I win $100, I can't take partials. I can't say, all right, I want to go for, you know, TP 50, you know, and then, you know, because it came back and retraced, I would have had to either take the profit at 100 pips or get stopped out at break even, right?
Okay, so is FX Choice the only one that you can do, the only brokerage that you can do partials with?
You can do partials on all brokers,
Okay.
but
Yeah, larger account.
on certain pairs that you won't be able to, because if you're on COP or Hugo's way or a broker that does 0.01 for every $1, this is the minimum you can trade with.
Okay.
So if I trade a pair and the minimum is a 0.01, there's nothing for me to partial because there is a lot size that's smaller than a 0.01 that's called a nano lot, but it's not a lot of brokers that offer nano lots, and especially not nano lots on indices. So that's why you want to stick to trading. Like for me, I recommend FX Choice to or Osprey now to most of the new people that come in for this reason right here. Because one, you can take partials. Two, you can lower the risk on your trades without blowing your account. And three, trading SPX actually gives you more pips. That's a whole nother story, right? Okay, Miss Tate. I hope everything okay. So I honestly, like, if you ever do some back testing and you measure the moves that SPX make versus US 30 versus NAS versus German 30, all the other indices, you're gonna get a big difference in pips. Like if US 30 make a 100 pip move, SPX probably made 150 pip move. If US 30 made a 200 pip move, SPX probably made a 300 to 400 pip move, right? And if y'all want to, I can go and show y'all that too, if y'all want to, right?
Wait a
Yes,
minute.
please.
Right.
Yes.
All right, hold on. And I done back tested this. Like, I don't even trade US 30 no more. I ain't even gonna lie. Like, I don't touch it, man. Like, for what? Like, for what?
I haven't since you said that.
Yeah. So it's lower risk and I'm gonna make more pips. Why? Why? Why I'm gonna do that, you know? So if we on the 4-hour chart, I'm just gonna, like, remember I showed y'all low to high, right? Low to high, right? We looking at NAS. This move for NAS, low to high, is 963 points. That's cute. That is real cute. That is cute, right? And for some people, that's good, right? That's great, right? Let's look at US 30. This same move, low to high. 1,742 pips. That's cute too. That's really cute. Like, I like that. I would appreciate that, right? I ain't mad at that, right? Like, this 963, 1,742 points, pips, right? But look at what SPX did under the same time frame, under the exact same time frame. 2,538, right? It doubled this number for sure. Almost tripled this number. And it almost doubled this number right here for the exact same move. You don't believe me, right? You don't think this is accurate. You don't think this is happening all the time, right? Measure this move right here. Low to high. I mean, high to low. This drop, 867 pips. This drop, same move, right? 1,282 pips. That's cool, right? This drop, 2,067 pips. Why am I trading these two right here when it's the same trade? All right, cool. We still don't believe it, right? Let's go next move, right? Next move. I think this move was, let's see, this drop.
Is it really considered less risk?
Yes, and it's less risk. Not only is it more pips, but it's less risk because, again, we can break down the lot size. Remember that? We can break down the lot size. So because we can break down the lot size, we can use less risk, which means we can stay in our trades longer, which means we can make more money, which means we can take partials as we go along the way and still not use our account in an improper way, right? Let's go to the daily. Daily, right? This move on the daily, low to high, right? Low to high, low to high. These are the exact same moves that each one of them just made, right? On the daily. We're gonna measure this. Low to high. 965 pips, right? I think this was the same move we measured on the 4 hour, but I'm just gonna do it anyway. Low to high. Yeah, it's that same move. So let's look at this previous move then. The lowest low over here. This low right here. I know you can't see a lot of this. Let me switch charts. Let's switch charts. Okay. And we're gonna do the same thing, right? Go to the daily. And we want this move that started on October the 20th, right? Let's find this same move, October the 20th on the daily on US 30, October 20th. Same move right here. So we got it. That's this low to this high. Let's find it on NAS. October 20th. October 2020 right here. So this is that same move, right? Low to high. 2,746 pips. That's good. Low to high. 5,366 pips. That's good. But look at this. Same effort. I'm looking at the charts the same amount of time. 5,000 low to high. I just made 6,899. That's almost 1,000 more pips than this.
How come it has less digits though on SPX? Like if you look at the first number, it's 689.9, and then the other one is 5,366.8.
You measure SPX in points. So for every point is 10 pips. So
oh, but the other ones you don't measure. Oh, I'm sorry. The other ones
you don't measure
that
SPX.
way?
Nope. I'm sorry, you don't measure US 30.
US 30.
Nah.
Okay.
Nope. So this number is what you're looking at over here and over here. But on SPX, this is the number you're looking at right here.
Oh, gotcha.
Yep. So not only is this lower risk, but it gives you more pips. So that's the logic behind that.
Have you shared this with everyone else?
They don't be listening.
Oh,
I think you've shared it a couple times in your classes.
Yeah, I have. I mean, I've
Yeah.
shown you guys that have come on this, but I mean, overall, like people don't probably pay attention to that. So,
Okay, so I have another question. I
okay.
know you put it in the chat, but with what you were just showing us how what was that, the SPX, you basically have lower risk but can make more money.
Exactly.
So if you was to if I were about me being new or whatever, how much should you just start your account out if you wanted to trade with the indices? Or just,
If
you know,
you want to trade indices, I mean, you can trade it. Like I said, if you trade with SPX, you definitely can trade with something as small as $150.
oh,
If you
that's it.
trade in SPX,
Okay.
because you can do 3% on your account, you know, with trading SPX, you know, because you can break your lots down, right? You can break your lots down by doing that, you know, by trading it like that, right? So if you were going to trade SPX with a $150 account, let's do some more math right quick. $150 account. And I want to do 3 to 5% risk, right? 3 to 5% of $150. 3% is $4.50, right? And that's what you want to risk for every trade, right? Then 5% is $7, right? This using proper risk management. You know, of course, this means that, you know, it's going to take you a little while longer, right? But you're not over leveraging. You're not blowing up your account. I don't know what $150 means to some people, right? Sometimes, you know, $150 is a lot of money for somebody. But if you want to be learning how to trade and still make money and treat your account, this $150 account, just like it's a $150,000 account, this is how you would trade it right here, right? So if you're doing 2 to 1, your win would be $15, right? On this account, 2 to 1, right? And if I'm risking 5%, at 5%, 2 to 1, 5% risk, should be $15 at 2 to 1, right? So if you get in a trade with me, you get in a trade with Kim, and you're using proper risk management, real proper risk management, you know, then you're going to be looking at something like this, you know, and that means that you're properly risking your account, right? You ain't growing your account like $1,000, I mean, $150 account, you know, to $1,000 in 2 weeks, right? Or 4 weeks, right? But your goal is to get it to that 1,000 this route, right? And once you get it to that 1,000 by doing it this way, I promise you, you know how to trade by then. Like by then, I guarantee you know how to trade because you properly risk your account. You know how to get in your trades, whether you're taking my trades, Kim trades, or your own trade. You're not over leveraging, so you're not afraid to take any trade because you know that any trade you get into, if you lose, you're only going to lose $7.50. You're not going to lose $56 on a $100 account, and now you ain't got but $96, $94 left in your account. You know what I'm saying? It'll take longer. It'll take a little longer, but you will learn how to trade this way, and you will learn how to properly risk your account, because once you get $1,000 in your account, right, and you start to risk 10%, remember what I showed you. You only got 10 times to lose if you're not winning on a regular basis.
Exactly.
You know, and then once you get this $100,000 account, you're gonna risk 10% of your account. That's $10,000. Again, you only got 10 times to lose $10,000 before your account is blown, you know? And if you lose, and if you are a one-to-one trader and you lose 5 trades and then you win 5 trades, your $100,000 account is now $50,000, right? How bad are you gonna feel if you did this, right?
Hey.
You gonna feel like, excuse my language, but you're gonna feel like shit. Like you ain't even gonna trade no more. Like you are going to be
True.
You will never enter a trade the right way again, right? You'll never be a good trader. I mean, and if you do, it'll be after you've gone through all this, you know, like a revamp, right? Like, you know, and got to this point. So versus if I lose, if I'm one-to-one, but I'm only risking 3%, right? And I lose, let's say I lose 16 times, you know, wait, 16 times. Oh, dang it. I got a calculator over here because I don't do any math. All right. If I lose 16 times and I'm risking 3% on a $100,000 account, all right. I lost $48,000, right? I did, right? But if I'm doing 2-to-1, I'm still up on my account. If I'm doing 1-to-1, I lost 48,000, right? But at the same time, if I was risking more than that, my account would have been blown by then. Now I wouldn't even have 48,000 in my account. I'll probably have like $12,000, you know, left in my account. And that's how you want to look at things, you know.
Now, was that an example, or is that something that really happened? 48,000 loss.
No, that's just an example.
Okay, good.
Yeah, that's just an example.
So you've never lost that much, huh?
Not that much. Not that much. No, not that much, man. I've lost a lot, but not, especially not at one time. Like not at one time.
How long have you been trading?
That's a little vague question because I started trading stocks first, and I was trading stocks for like 2 years, 2.5 years before I got into Forex. So I'll say Forex altogether has been like now going on 3 years now. Going on 3 years. Like this is my second year. So I started in 2018, and then this will be going into October, August will be that'll be 3 years.
Okay, so besides watching the videos in I Am Academy, leveraging Wright, and you know everything that's in the mentorship or whatever, what other advice can you give to new traders from your experience?
Outside of that, everything, stay on the charts. You need to live on the charts, right? It shouldn't, as a new trader, like it shouldn't be a day that you don't touch the charts, right? Even if you don't actually trade, I think Kim said this before too, like how she did Arlette, where she just would make Arlette just stare at the candles. Like sometimes I do that even to this day, right? And it's just so I can learn and watch how price reacts at certain levels, what price does when it reaches certain points, what price does during certain times of day, during certain times of night, during certain news events. You need to understand all of that, right? And can you be a profitable trader without knowing this kind of stuff? You can, but you'll learn that as you get as you spend more time trading, you'll learn though that you need to understand these type of things, because you can see the charts all day, but there's outside factors that affect everything we do. And then I would say your technical and fundamental analysis is probably going to be the first thing that you get. And that's understanding how to read the charts, how to mark up your charts, how to interpret your indicators. And then, fundamentals, that's understanding news, how world events affect the market, especially when you're trading indices. But the thing that's going to be the hardest thing to learn and the hardest thing for you to like grasp, because it's something that you really can't teach, and that's like mindset. Right. And I know like everybody talks about, mindset, or whatever. But like for me, it's three pillars of trading. Methodology, that's a matter of fact, I did I did this good session. And let me see if I can find that. It is really, really good. And I call it the triangle offense. If anybody know about Kobe Bryant and Michael Jordan, that is the playbook that Phil Jackson used to run their offense, right? Let me see if I can find this. But that one, I talk about how you need to approach it. I think this is it right here.
It's already on your page.
I think so.
And you said it's called the triangle analysis?
Triangle offense.
Okay.
I gotta find it. I gotta find it. I don't even know. It might not be in. I might not have uploaded this one. This one might be on my Zoom account. I think this one is saved on my Zoom account. So I'll have to come back to this. If y'all, I will give me like a week and I'll try to find it. Where it is. But basically, you want to look at it like it's a triangle offense. Like everything you do, you got your trading, your methodology. I spelled it wrong. Methodology. Still spelled it wrong. Whatever. Methodology, right? This involves trading plan, like technicals. Oh, hang on. I didn't put it on the recording. I made one of the guys. I had everybody. I didn't record it, but what I did was I got it written down. That's what it is. And I made everybody do homework. That's what it was. think
I still want it. I'm willing to read it.
let me see. Yeah, that's what it was. Trade methodology. Let me type that in just so I can cheat this. I ain't gonna type that over again. I can spell though. Don't get me wrong, man. Don't look at me crazy. Right here. This isn't what I was looking for, but these are the paradox you gotta have. And you know, like I still think I got something that I need to, I would have to show you guys, but this is what it is right here. These three areas where your methodology, that's like, that covers risk management, your trading system, that's what am I breaking retest, am I a reversal trader, and then the third thing is the mindset. You need to have all three of these together in order to be like the best trader you can be, right? So I'm gonna try to find the homework that I gave everybody. If I can find the homework that I gave everybody, it just like give me a couple days and then inbox me on Discord and I'll send it to you guys. And I think that'll kind of give you like a good way to kind of help you build out your trading plan. And these are the things you want to look for, because it goes over everything that you want to get in order to put together your triangle offense, right? So
Can we get a screenshot of all three of these things together?
take it now.
The last one is kind of, yeah.
Yeah, take it now. Oh, hang on. Okay. Here we go. All right. And let me go back to the questions. And I think that was all of them. I think it's one more, but I think it's Tate as a lead. So let me
Correct.
yes.
I have a question.
Yes.
I'll go back. Sorry, I'm not feeling well, so excuse my tone.
You sound muffled, Anna. I can't really hear you.
You can't hear me.
She said forgive her. She's not feeling very well. She's trying to ask a question.
Oh, I got you, but I can't hear.
Can you explain that what is exactly 1:1 risk management or 2:1? Like if I am taking SPX and I'm taking TP1 550 pips.
I think you said, can cause I really can't hear you. I don't know. Like, let me see if it's me.
Okay, let me log in from another device.
You want to type it? I think he said somebody. I think Noel asked a similar question. Can you go risk reward on charts like SPX and GBP? Yep.
Yeah, Corey. That was my question for sure.
Okay.
Like how you plan out your trade, and what would be an example of a good setup as far as risk reward, bad setup, risk reward.
Okay. I took this little trade today, and yeah, I don't want to use this chart. What exactly is one-to-one? Okay, cool. Yeah, that's an easy question. So we look at the 15-minute. I'm not gonna do any like chart analysis. I'm just gonna go over what it would look like, right? So if I'm trading, let's say I'm gonna trade this sale right here, right? And me trading this sale, right? I use the fact that it had this high right here and this rejection over here. Right here. And then once it got back up to it, this rejection that started on this candle right here to say, all right, let me go ahead and sell right here. So if I'm gonna sell right here, and this is not to say that this is, any, this would be how I would interpret any trade, right? If I'm gonna sell right here, right? Let's say this is my entry. My stop loss is gonna have to be above these highs right here that we already made, right? This is a good tool to use. This little tool right here, you can find that right here. Long position, that's what you need for your buy. Short position, that's what you need for your sell, right? So if I'm gonna be looking for a 2-to-1 trade, a 1-to-1 trade, right? That means that this box is gonna be the same size as this box, right? Right now that box is 32 pips. 32 pips right here, 32 pips right there. That means that if I'm gonna take a trade, I am willing to lose 32 pips to gain 32 pips. I'll go over that, Brandy. Let me drop this.
So that's your 1-to-1 right there.
That's what I mean when I say 1-to-1. Oh, and when I say 2-to-1, right, which is why you want to be 2-to-1, you don't want to be 1-to-1, because if you're 1-to-1, you're losing as much as you're winning, right? Everybody that's on this session will get the recording. If you either stay on the session the whole time, I will drop it in this chat, or if you DM me and you were on the session before, I'll drop you the link in Discord. That's how you get the recording. Okay, so in this case, if I took this trade at a 1-to-1, this is what my risk reward will look like. If I continue to do this, the probability is higher that I'll end up being a losing trader overall, right? If I'm gonna do 2-to-1, right? This box needs to be, well, if I'm gonna do 2-to-1, this box needs to be 2 times larger than this one. So let's say we're using 32, this needs to be 64. That's 2-to-1, right? So now, if I got in this trade, I'm willing to lose 32 pips to gain 64. This means I'm 2-to-1. And what's cool about this little indicator right here, or this little tool, my risk reward is right here in the middle, this number. The number of pips I'm willing to risk is this number. The number of pips I'm looking to gain is this number. I would be losing 8% and I will be gaining 10%, 16%, right? 0.8. Yeah, 8% for 10%. And that you can even go into your this little area, right? If you wanted to know exactly what it would be, let's say I'm using $500 account, I'm going to be risking 3% on my account, right? And you want to make, if you wanted to use dollars, you can say $15 or whatever the case, but let's use percent. So we're going to say 3%, right? And I'm willing to risk 60. I want to gain 64 to, I'll be willing to risk 32. This is whatever my account size is right here. I can know exactly what I would be winning and exactly what I would be losing, right? So if I lost this trade, my account will be at $487.20. If I win this trade, my account will be at $525.60. I know exactly what I will be looking at. The numbers are a little off because you may have to consider your commissions, but this is roughly what you will win on your account if I won this trade. Now, let's say I was just gonna be like, I'm gonna always use 50 pips, right? Let's say that, right? Here's 50 pips right here. I would lose 13% of my account and my account size would be $485. But if I won this trade, if I'm willing to risk 50 pips, I need to be trying to gain 100 pips, right? On this trade, I gained 100 pips, right? And in this case, my account would be at $530, a 26% gain on my account, right? 2.6% gain on this account. I would have gained 2.6%. I would be losing 1.3% on this account. Just take the one and move it over one decimal place.
That's from a 0.01?
This is not, the lot size isn't considered right here. This is just saying that I'm only going to be risking 3% of my account at 3%, right? You want to use 3%, right? But this trade actually went for 133 pips. Let's say we got it all the way down at, at the wick, right? We got it all the way down to the wick. And when we got it all the way down to the wick, right? Let's move this over here. We took this trade all the way down to the wick and we won this trade, right? My risk reward was 2.66 to 1, where this box is the 1. If I was to take and draw this, right? This is what I'm willing to lose, right? That's 1. That's 2. And then the rest of this is the 0.6 of that. That's all it is, right? This is what I'm willing to lose. I take what I'm willing to lose, multiply by 2. That gets me the rest of what I got. This would have been me hitting my 2-to-1 target right here. This would have been me getting the 0.66 that was left right here. Right here. That's what that looked like.
Okay, so I understand this thing, long and short position thing. But thing is that when we do trade, means in New York session or something. So suppose we have to, usually I do SPX, right? So I have to go by TP1 diet, right? So that is 5 pip, right? And when we are in trade and it goes back to retrace 10 to 15 points, then means what is that? So should I means if I'm saying 1:1, so after when it retracing 5 pip, means sorry 50 pip, so I should come out, or means 1:1 is if I'm targeting 5, then I should go only for 5 pip, right? Back.
That's that, or you need to lower the lot size so that you can actually shoot for at least a 1-to-1 on that trade. So in this case, you would be working with a negative risk reward, right?
Mm-hmm.
Because you aren't even operating 1-to-1 risk, right? You won this trade, but you were willing to risk 2 times more than what you were looking to win. Same way you just did before, right?
Mm-hmm.
Right. So you willing
So means
to,
if I want to stick with that rule, 1:1, so should I close that trade after 5 pip? Means when it is in negative 5 pip, 5 pip.
you need to do this.
Mm-hmm.
You need to do this then. 1-to-1.
Okay.
So maybe you need to shoot for TP2.
Okay.
So that way you at least at 1-to-1 and you not doing a negative 1-to-2. Like you're not doing a negative, right?
Mm-hmm.
Because if you're doing like this all the time, now you just really put your account at odds.
Yeah. So actually, this is happening with me. I'm doing good trades. I am taking profit. Everything is good, fine. But my profit is very less, and my loss is big.
Right.
So instead of growing my account, I am on no. Every time I'm on no profit, no loss. Right? Means when I do it on every Friday, how did I played? So it is like sometimes no profit, no loss.
Right. You just break it even.
Yeah.
Yeah. Because this is why, right?
Mm-hmm.
You in the opposite situation, right?
Right.
This is what you're saying you're willing to lose right here. These
Mm-hmm.
two blocks are what you're saying you're willing to lose. And you're only willing to you're only winning this block right here.
Right. Right.
So you need to put yourself at least to this point where I'm winning at least the same much amount that I'm willing to lose.
Okay. So when you talk about this means 2:2, right? So if I means what will you prefer, twin trading or trailing stop?
If you are, so if you're going to do it like this, then you would probably want to be trading with trailing stocks immediately, right?
Okay. Mm-hmm.
That means that as soon as I'm close to my target, like maybe 20 pips in profit, I have to put my stop loss at break even.
Mm-hmm. Okay.
That's the only way you can combat against this if you're going to trade like this. That
Mm-hmm.
means that as soon as I hit it,
Mm-hmm.
I got a stop loss in automatically. As soon as I see 20 pips of profit, I'm already moving my stop loss in profit or
Okay.
even.
Right. But sometimes it means this I understand this theory, but sometimes what happens means 20 pip it fluctuate, right? So when you move and immediately it fluctuate back and you are out of the trade, right?
But if this is how you trading right
Mm-hmm.
here,
Mm-hmm.
then you will notice like even like you already noticing that you only trading at break even. You
Okay.
see what I'm saying? Like if
You're not in loss.
you're not right. And
Okay.
then if you were to do it the way that I just said, where you move it in profit,
Mm-hmm.
that means that you'll get profit, but you won't always get the whole move, but you won't be you know trading at break even. You'll slightly be moving into profit over time,
Okay. Got it.
right?
Okay.
Yeah, and I'm so glad you went over this one because I took the exact same trade at your exact same point, but I didn't do the reward ratio. I was expecting it to break that M pattern. So since it never did that, so it took me out. I hit my not a stop loss. I broke even, but knowing that I could have gotten a really good 2-to-1 or 3-to-1 ratio on that one.
What was your trade? What you took the sell from right here?
I took that exact same sell at that exact same point.
Okay. And your here this would have been your risk reward right here. And then, maybe let's say this was your target down here somewhere, right? Um, and ultimately, right? Let's say this is the same place you got in, right? You would have probably initially gave yourself maybe a 50 pip stop loss. That would have put you at 2.4-to-1, right? Overall. But eventually the trade increased your risk reward ratio. So usually you'll start out at one point, and then as the trade goes on, now you're like, okay, cool. This is my stop. Now my trade is actually, it was a 2-to-1. Now it's actually a 4-to-1 trade right here. So
yeah,
this is how you want to look at things all the time. The same way for a buy, you would just use the long position. Let's say we got into a buy over here at this retest right here. Our goal would have been to trade back to these highs, right? Let's just say right here. And then we'll use the most recent low as our stop loss right here. This is the most recent low. That's the entry right here. Even if we took this trade for the buy, right? Right here, right? And let's say this was our entry over here, right? We still initially we're almost 2-to-1. We're 1.88, right? But the trade actually gave us an even better risk reward, right? We only risked 10 pips. We were only in drawdown for 10 pips. And the trade ended up going, it hit our target, but it ended up going about 100 pips in profit, right? So this gave us an 11-to-1, 11.1, basically 11-to-1 risk reward ratio on this trade. That's what's going to keep you profitable. If you look for if you manage your trades this way and you use risk management properly, this is what you want to look for, right? That way, if you always operating at, let's break it down a little more, 4-to-1, right? Let's say I'm always operating at 4-to-1 or I'm always operating at 4-to-1 risk reward, right? I lose and I'm willing to risk $100 per trade, right? I lose 4 trades, right? I'm down 100, I'm down $400 on my account. I win 4 trades, right? I'm actually up $800 on my account, right? Because then if I lost 4 times in a row, then I lose one and I win one trade that I was 4-1 on, right? And I got the whole trade. In one trade, I just won back those $400 on one trade. So the next 3 times that I take trade, the next 3 times out of the 4 times that I win, right? So let's say I won 4 trades, I lost 4 trades, right? If I lose 4 trades and I'm risking $100, every time I lose, I just lost 400, but I would have won $1,600. And by the time that I win, you know, if I win 3 trades, I would have lost, I would have got back what I lost plus 3 times more, which gave me $1,200. Got it?
Yes, sir.
Corey,
It sounds complicated, but it's not though. You know, what's up, Noel?
do you tend to trade reversals more than the break and retest?
No. I don't trade reversals, or I'm kind of evolving as a trader where I don't necessarily trade breakouts or reversals. I try to I'm trying to like revamp some of how I trade, because I'm trying to find the impulse. I want to trade the beginning of these moves, this move, or the beginning of this move. Will I trade inside this? Yes, I will. But if it breaks out, I want to be in the breakout from down here or right here. That's where, like, I'm kind of like not. I'll use breakout and retest, but I'm kind of like I'm kind of like a hybrid trader. Like I don't want to like kind of be like, you know, breaking retest per se and only look for that setup, because I want to try to put myself in the lowest risk trade, the one that gives me the highest risk reward, right? So like on this trade, 4-1, right? But sometimes if you take break and retest, your risk reward isn't that high, right? So if I was to trade this trade, right, trade the breakout of this trade right here, and let's say I traded it from here, right? Didn't this break and close above right here? That blue candle right here, this broke and close above, right? The next candle, when we have been looking for our entry right here on this next candle, right? If we had a bought right here, we would have been taken out of the trade, or we would have been in a lot of drawdown, right? Because the first thing, right, let's say, you know, most of the times we targeting 100 pips, or, you know, at least 100 pips, right? So from here, 50 pips is 39.12. Then you're looking at 39.17, right? Our stop loss would have been at least about 100 pips, right? That would have been here. We would have used this as our, you know, one, you know, maybe this was probably been our stop loss right here. That's the most recent low. But then this is actually the most recent low right here. So this would have been our stop loss. And anytime you're looking at a trade, you want to use the most recent low. This is a short-term low on a 5-minute, 1-minute chart, but then this is the most recent low on the 15-minute, right? So if I'm gonna take this trade, right, and I have to make sure that if I get in this breakout and it goes against me, I'm gonna be in drawdown. And, I'm gonna be in drawdown, And if I popped, right, let's say I popped, right, near my stop loss, right? Let's say I popped right here. Now, I'm still gonna look to get to break even, right here. But I'm also gonna wanna still look for my 100 pips, right? That's gonna be right here, right? As my overall target. But even if I pop, right? Now, my pop entry would be below the most recent low. I'm gonna use this one, but I'm probably gonna use this one, right? So my stop loss is gonna be on that trade right here, below this low, right? Now, just using the pop as an example, right? Just using the pop as an example. On the original trade I entered, I have to say, if I don't want to close this trade out, I have to be willing to lose more money, right? So now my stop loss that was right here, which was reasonable, 100 pips, now I got to put it underneath here, or I got to put it underneath here in order to win the trade, right? Now, you see what happened when I did this? When I just did that, right? What just happened, right? If you didn't notice that this box right here got a lot bigger than this box right here by a nice amount, right? We want to measure that, right? I had to be willing to risk this much more on my trade over here, right? I had to be willing to risk this much more just to get what I was expecting out of this trade, right? Now, if I look at where I popped, right? Where I popped, right? Where I risked on this trade was only this big, right? And if we notice, it went into profit. It did everything we were supposed to do over here, but I only risked this much for the entire trade. Which one you want to risk? You want to risk this or you want to risk this?
You want to risk less for sure.
Right?
Number two.
You want to risk this versus risking this. So instead of me, like if I'm gonna take this trade, instead of me taking it right here, I'm gonna look to take my entry down here where it's closer to the stop loss that it was actually looking for, right? In this trade, I was only down 43 pips. If I had waited and enter where I popped, right? In this trade, I was down 133 pips altogether. Which one you want to be? Right? Even if the first trade hit take profit, right? Let's say we stayed in this trade throughout all that drawdown, right? And sometimes this is not something that you can avoid, but I don't want to be in one, let's see how many hours that was. I don't want to be in drawdown for 1, 2, 3, 4, 5, 6 hours before I go into profit and hit my target, When over here, I'm in drawdown for, when I immediately go into trade, I'm in drawdown. I go into profit right here. Even I go into profit right here. If I wanted to, I can close this out and take a partial, right? I go into drawdown for on this hour right here, but then after that hour, I go into profit right here on this candle, and I'll never see any drawdown after that. I never see it after that. So plus, guess what? I can still be comfortable to stay in this trade until I get the full move, right? Because I'm in down all the way down here. And if I really thought this was gonna move, I don't even have to come out of this trade, right? I don't have to come out of this trade from right here, because at this point, my entry should be safe enough to where, one, if I left a partial in, right, and it came back down to retest, this is where I would add this trade right here. I would add that trade right there and see if it retests, And if it retests, I got in this trade still, this partial, plus I got in this trade, right? And then I would be looking to take it at least back to these highs over here. And I would have the same setup with both of these trades, but I wouldn't have had to be in drawdown. Same trade, same entry, but without the drawdown. It just take you a little longer to get this. And you got to be a little more patient to get this right here. And you got to know the signs, what to look for, to get this entry versus this, instead of thinking that this is going to be a continuation, right? There's certain things you got to look for to see that this is going to be a rejection to go back to the upside.
Yeah, that's what I was about to ask you. What are the signs? Because after it rejected that low and it went back up, I popped again for another sell, so I'm in drawdown right now. It's coming back down, but I thought, hey, maybe it'll hit that area and reject it back down, but I didn't wait enough, I guess, for enough candles to reject.
So this is a part of what I'm kind of working on right now at myself as a trader. Like, if y'all ever wonder what I do when I'm not teaching and trading and stuff, I go back and I back test all the time. And like, to me, like, that's if that was this, like, when the person asked me, when I think LeKeisha asked me about what else you would recommend, like, I back test 12 times more than I actually trade. I think, to me, the most important thing about being a trader, and especially if you're going to be full-time, is back testing. Back testing is way more important than actually trading, because the more you back test, basically back testing is giving yourself extra trades, right? Like, say, in a day, like, some of us take between 2 and 4 trades in a day, right? If you can back test different setups, and review the charts, and that's basically you trading, trading the charts, right? Like, all right, if I was going to enter this trade, right, for this buy, especially using this replay tool, right? Let's say I'm going to trade a break and retest off of this area, right? I'm gonna trade break and retest, right? I want to know. I want to give myself some extra trades, right? All right. So this is my high. This is my low. What does a break and retest look like right here, right? Maybe let's just add these wicks. So this is me giving myself more trades by using this tool. This is like the best tool in the world, right? So I want to see, I want to take this trade, right? And what's even cooler is what you can do over here, which is you can set up a little demo account over here, right? And you can set it up so, you know, okay, I'm gonna actually set up a trade, right? Create a new order, right? Take profit, stop loss, right? I'm only gonna risk 3%, right? I want 100 pips. I want 50 pips, right? I just made up, you know, a whole trade scenario right here, right? And if I win the trade, I'll get $420. If I lose the trade, I'll lose $210, right? I'm only risking 3%. The units, I don't really never pay attention to them because if I put in this number, it'll give me whatever the unit's gonna be. That's the same thing as the lot size, right? Bam, right? Oops, I don't know where that went.
So that paper trading thing is in TradingView?
Hey Corey, I don't think the paper trading works on the back testing on the replay. I think it's only forward and live.
Gotcha. You're probably right. You're probably
Yeah,
right.
I tried it a few weeks ago and it only did live, not back testing.
Okay. Yep.
But you could still just put the numbers like in a notepad or a spreadsheet and just mock it and see if you won or you lost, right? So
Yeah. You could just do that too. You know, like it's, you know, that's just, you know, just how I would do it. You know what I'm saying? Like if I was live trading and back testing, right? But that's why this tool right here work just the same, right? Okay, cool. This is where my entry would be. All right, cool. So I'm gonna put my entry right here, my stop loss be right here, and then my target would be right here, right? Then I'm gonna hit play. Let's see what happens, right? Broken close, right? A broken close. So now I am going into my notebook, into my my journal, wherever I'm doing this at. And here is my trade for today at February 8th, 7:32 p.m. And I just took this trade. This is a trade that I took, right? It broke, it retested, and I entered, right? What's even cooler that I didn't know that they do this, right? You can use your trading view to do all of this stuff, man. Like, look, this little box right here, text note, right? I just started using this week, right? I didn't even know this existed, right? But I'm about to
Can you
start
show that again? You said it takes notes?
text notes, right?
Take notes. Okay.
So down at the bottom of your screen, you'll see these little tabs right here. And then you'll see one that says text notes right here. This right here lets you create a new note. You can give it a title right here, right? Put all your notes right here. You can copy your screenshots right here. So if I want to come back and look at what was going on right here, look what I can do. All right, cool. I'm gonna open up another window, right? Right, bam. This is everything I was looking at when I took that trade, everything I was looking at. I got my notes saved digitally, right? Which one was it? I got all my notes saved digitally, right? Another one, right? Here go my notes on this trade. It's basically, I mean, I'm gonna start using this for myself, especially if I'm back testing. Another thing you can do is use an Excel sheet, right? Something else that I do, right, is my daily study notes, right? Everything that I got, right? This is another thing I just started doing too, but you know, I'm just showing you guys because this can help you, right? You got Excel, create you a little document, whatever. Here go all my notes. Here go my links, and then here go the picture, right? I can just quickly see, all right, this is what was going on this, that was going on that, cool. This is what I was looking for over here, there, here, whatever the case is. You know what I'm saying? Like all of this is there, right? I was back testing and trading Bitcoin this weekend, right? This is what I was looking for, right? This is my whole trade, right? I got in the trade right here. It went into profit right here. I closed out around here. I left a partial in. It came back and took me out. Then it used the same area that I entered as the impulse move for the move that started now. If I was really on my stuff, I would have been in this move that ran up to where it is right now because I had the entry right here. I didn't come back and review it, right? I didn't come back and review this, but I know for the future, I know the next time when I see something like this, because if we look at Bitcoin, right? Look at Bitcoin, and let me pull this over here. Right? Looking at the 15-minute, right? And where I was trading Bitcoin, my entry was 38,252. So $38,252, right? And if I had been, if I had been watching this, paying attention, right? That same entry that I had, I would have known that I could use it again, right? And then I would have been in this trade still, right? It's almost 1,000 pips, right? But I don't know that. I don't know. I don't go back and review my notes, right? I don't go back and review that. I had the entry, right? And over here, if I had entered again, look how much drawdown I would have been in. Practically none, practically no drawdown on that trade, right? For something that just went thousands of pips. And actually, I take that back. I didn't trade Bitcoin, but I did purchase Bitcoin. So I still caught the move, but not like I should have, So I did get some Bitcoin over here, but like that was for my Coinbase, not in my broker. But I know based off of this, if I see something like this next time, I would have known that after this hell right here, there's a chance that I could have used this same level again to trade from, which eventually that would have been the play, right? So that's why you want to take that stuff into consideration. You want to back test because now you're basically giving yourself extra trades. giving yourself extra trade. So this trade, like, you know, this is what we in right now, right? I'm in the trade, right? So I'm just gonna hit play. Like I said, I'm gonna hit play. I'm going to drawdown, out of drawdown. I hit target right here. This would have been a winning trade. You document this. You go in your notes. This trade started out as 1.72, right? I only saw drawdown of this amount right here. This ended up being a roughly 8-to-1. And also I got some extra pips. I also got 100 pips out of this. So this ended up being a 10-to-1 trade, right? If I had got in a little higher, still good entry, still breaking retest right here. I would have got in on this blue candle right here that pushed down, it pushed up, still hit my target, right? So that's one trade, right? I want to take the sell. I think it's going to sell, right? From up here, right? Cool, no problem, right? I'm going to sell right here. My stop loss right here. My target, let's say we go with this right here. I'm going to hit play. This one, either I'm getting stopped out or I'm stretching my stop loss. One or the other one. So I would have lost this if I had stayed in, or I would have won this if I had to let it go, right? I gave myself 2 trades. I literally just gave myself 2 trades just now. Literally just took 2 trades. You know, and you can do this, you know, however, like, you know, you don't have to use the replay tool, you know, you can just, you know, do it all, you know, on the charts, you know, all right, this would have been, you know, maybe breaking retest right here. This would have been my break. This would have been my retest. This would have been my trade. You could do it as simple as that. Like, is this breaking retest or this breaking retest or whatever the case is? You know, that's how you want to back test right there.
But it's like so easy to see it after the move happens. Like after the move happens, you see so many stuff. That's what I've been working on too, like back testing and not going back and saying, oh, I should have done that because the move already happened.
Then, you know, another thing you do is you use Bitcoin. Like on the weekends, all right, cool. You don't want to deal with hypotheticals, right? Go use Bitcoin. Bitcoin is, you can do this on the weekend, right? You can come in here and take live trades, but use the paper trading on Bitcoin. So, you know, on the weekends, if I'm not, you know, if I don't want to risk my money, you know, my real money on the weekends, that's what I'm using, you know, Bitcoin for, to set up hypothetical trading situations, right? Where I can take this trade, you know, down here. I set up this as I ain't gonna lie, I set this up as a demo trade, but I was like, damn, like this looked good. So I took it in my regular account. You know, I only meant to demo trade this, but you know, I still made like, I think I made like $600 on the weekend, just, you know, on a small lot size where I went from here to here, you know? So, you know, if not only can you trade Bitcoin on the weekend and demo on the weekends, because it's live moving markets, but, you know, if you see the setup, you can take it too, you know? So where I took this trade from down here, you know, down here at 252, let me add this back. So over the weekend, I took this trade from here. Right? Because normally I usually don't trade Bitcoin, but once, I used to never trade Bitcoin until I realized I needed to be using Bitcoin to backtest, right? But even me backtesting, when I got in this trade, right, I didn't have no drawdown. I still managed to get like 200 pips out of this little move right here. And then, it was a live trade, right? So today, if I want to live trade this, like say for instance, I want to see how this rejection gonna be, right? I got wick rejection. Is this gonna sell off? I could take this trade right now, no harm, no foul. If it look good enough, I'll get into it in my live account, So that's how you gotta look at it. And like I said, I use this little thing right here if you want to. If not, put it on a piece of paper, you know what I'm saying, or whatever, put it in your journal, whatever the case is. And then I think there was one more, and like I said, if you want to do this too, you know what I mean, like I'm always in this, like putting my notes and stuff in here. So, and the reason why you could do it in here, the good thing about doing it in an Excel sheet is because, say for instance, you are looking for something that you put in here weeks ago. Instead of putting it in a notebook, right, where you wrote it down and you'll never, ever, ever, ever for the rest of your life be able to go back and find that, right? Why not put it in here where now if I hit, find, if I use the find option, right? How many times did I write drawdown in here? It's right here. So if this one, however want to look for this, right? Anything that I wrote that has to do with drawdown, I will have access to it, right? I want to look at 15 minutes, right? There are 14 entries of where I have written the word, this phrase, 15 minutes. So that's this chart, that's this chart, this chart, this chart. So everything I wrote down about the 15-minute chart, I can scroll through this and find it. And I don't have to like not have access to this, right? But if I wrote it down in a journal and I lose the journal, I don't ever have access to it again, right? And not only do I, not even thinking that I'm gonna lose it, but what if I never lose it, but like, you ain't gonna remember that you wrote something about the 15-minute chart on page 292 in, in a journal, so.
So this is your journaling.
Yep. Yeah. All right. I think Brandy, I don't know if she's still on. I don't know. Sorry it took me so long to get to these questions. But then Brandy asked about the higher high, higher low indicator. To simply put it, let's delete you. The how do you trade higher high, higher low? So usually you want to use, once you get a higher high or a higher low, you want to use those as either sell signals or buy signals. When you get a higher low, that's usually a buy signal. When you get a higher high, that's usually a sell signal. But you want to use that same situation when you get the higher high or the higher low in conjunction with price action, right? You're not just going to say, oh, I got a lower low right here, so I'm going to sell. You want to say, oh, I got a lower low right here. Does price action confirm that lower low as well, right? Does price action say I should buy down here where this lower low is? If it does, then hey, I have possibly a trade set up. If it says I'm here and I got a lower high, I see the lower high. Does the candlesticks line up with this selling off? Yes, it does. I take the trade. Does the candlesticks line up with this taking a buy? Yes, it does. Take the trade. If I miss this, maybe instead of me taking another buy, I wait for this lower high to be made, and then I try to take the buy at the higher low. And yeah, that's kind of how you would want to look at it, just a quick rundown. But you have to also consider the time frame that you're trading from. Like a 15-minute will make a low or a high or a higher low before the 1 hour will. So if you were trying to trade this area on the 15-minute, on the 1 hour, you might not get the same level, right? So you have to be, so like on the 15-minute, this area made a lower high. I can't use this lower high on the 1 hour to trade this because it's not a valid lower high on the 1 hour. On the 1 hour, there wasn't a lower high made until we got to right here. And then that got blown out and then just made a high. So, and then like sometimes on the 1 hour, on the 4 hour, on the 1 hour, there was another lower high right here. There isn't one on the 4 hour. So you have to take the time frame in consideration. So you have to use, these are active signals to let you know you are potentially reaching the area, but you need to use time frames and candlestick patterns as confirmation. So that's what that is. That's how you use that. And then finally, Robert asks, how do you do stop loss thing? Can't see. I think, how do you do the stop loss thing? Something when setting up trades that show risk reward, etc. So I think you're asking like, can you, if you're still on, can you explain that? What you mean? I don't know if I was still on. The long and short position, my friend helped me find it. Yeah, okay. Yeah, it's right over, right here on this one, right here. And I mean, when you're live trading, wherever you think you're gonna put your entry, like if I'm gonna look for the retest, I'm gonna look for it right here. I'm target back these highs. My stop loss below the most recent low, probably right here. Just hypothetical. Right there. And if I was gonna sell this right now, let's just say I was gonna sell this right now from the top. The other thing this does is it counts how many pips you are in profit. You'll see that this number changed. And you'll see this little line that follow you down. So as this trade is going, I am this amount of pips in profit, right? And you'll see this you'll see this follow it down. Little line follow it down. So, yep. Yep. Okay, I think that is it. Miss Tate had to hop off, so Miss Tate had to hop off. Can you show me how to add my MetaTrader on TradingView screen? I don't know what she mean by that. You can't do that, so I don't know. Okay. So yeah. I think that's it.
Corey, brother.
Yo.
What's up?
What up, man?
I'm here, man. Listen, could you send me back some of those training thing what you put on, give us, because I reprogrammed my computer and lost most of them.
You know anyone in particular that you want?
The 415 strategy.
Okay.
I think there's two other ones. I don't remember.
Okay. I think they might be.
I have to find a next way saving them, man.
Okay. All right, cool. I will do that.
I remember the others. I'll send you a message.
Okay, yeah, just send me a message on Discord or whatever, Telegram, and I'll send them over to you if you can remember.
Yeah, man.
Yeah, let me go ahead and save it. I'll go ahead and